if you're explaining it to a sixth grader, I'm not the guy that can explain all of this. So what we've done today is brought three of the greatest minds of cryptocurrency trading and the cryptocurrency markets together to start explaining not only what's going on, but the opportunities that are going to be facing the cryptocurrency market here over the next 6, 12, 18 months or so. So I'm going to bring them in one by one. I'm going to allow them to introduce themselves. We've got James Altucher. James is with Paradigm Press. Also, we've got Ian King. Now, Ian is from Banyan Hill. And then last but not least, Sam Volkering. He is with South Bank. Let's bring those guys in right now, Ryan, so that we can get everybody right. Let's introduce each other. Let's start with, let's go with Ian, because I like Ian's shirt right now. Ian, tell everybody about yourself. Take about 30 seconds, maybe 45 seconds. You could take 60 if you've got even more than that. One thing I want you to share with everyone is, what is the first price that you bought Bitcoin at?
The first price. Okay. So my name's Ian King. I'm the editor of Strategic Fortunes at Banyan Hill, also the editor of a number of other services. I come to the newsletter industry from a finance background. I was in Wall Street. I started at Salomon Brothers, worked at Citigroup, was a prop trader on the street, ran my own hedge fund during the financial crisis. We had a 261% return in 2008, betting against the financial markets, betting against a lot of the derivatives that I had helped underwrite when I was at Salomon Brothers and Citigroup back in the day. I then took some time off and started reading and trying to learn as much about the world as I could. And as I was reading, I found that I like to write. So I started writing, and then one thing led to another. I wound up at Agora writing about growth investing with a specific focus on cryptocurrencies. So here we are now. And the first price I bought Bitcoin at, I had a very fortuitous meeting in 2013 with the founder of Grayscale. And it was August 2nd, 2013. The price was at $100. But I will be the first to admit that I bought 2 Bitcoin at the time, just trying to figure out what was going on with the market. So both the best and worst trade of my life.
Nice. What price was it?
It was at $102.
Okay, 102. All right, let's go to Sam. Sam Volkering. Sam, tell us about yourself, 30 seconds, 45 seconds or so, and what price did you buy Bitcoin at first?
I don't know if I want to answer that last bit, but I will. So I'm Sam Volkering. I'm the head of crypto research and breakthrough tech research at South Bank Investment Research. It's a lot of research. We're based in the UK. I'm Australian, and I live in Portugal. So go figure that one out. Look, we cover everything, all the breakthrough technology trends. You know, I first tipped NVIDIA back in 2013, but crypto has been my thing. I've written a couple of books, hence the shameless plug over my shoulder here. Back in 2017 was the first one, and then the most recent one, the Crypto Handbook there, got published in 2023. My crypto journey goes way back to about 2010. So my first purchase was at about $10 when I first bought Bitcoin.
Nice.
And I've ridden up and down that Mount Gox mountain, waiting on funds to come back. You know, found it on the deep web and just found a fascination in everything and everything about Bitcoin. And then once down that rabbit hole, I guess I can call myself a crypto degen because it's just exploded in the decade and a half ever since. So that's my story in a nutshell.
Excellent. All right, last one, and surely not least, James Altucher. James and I have had some time together, and I enjoyed it when we spoke. Man, you can't put everything that you've done in 30 to 45 seconds or so, but try, including first price you bought Bitcoin at.
Yeah, so I run a hedge fund and a VC firm, and I'm a podcaster, and I've written quite a bit of. I've written over 20 books, and I mentioned that because it's related to the first price I got Bitcoin at, which is in May 2013. I created a store where there was only one product, which was a book that I was about to release, and I was only selling it for 1/10 of a Bitcoin. So you can only get this book a month ahead of its release if you spent 1/10 of a Bitcoin for a PDF of the book. So essentially, in today's prices, you'd be spending $6,500 for a PDF of my book, and this was in May 2013. But Bitcoin at the time was $61, and I sold about 100 of these, so got about six of those Bitcoins for $61. But
Nice.
I have since sold all my Bitcoin. Bitcoin is not my favorite cryptocurrency for various reasons. Although I am very bullish on Bitcoin, I'm more bullish on other cryptos.
Okay. I'm hoping we're going to get into that. Let me explain real quickly, gentlemen, the flow of what we're going to do today in let's call it an agenda. I want to spend some time going through a little bit of Crypto 101. Like I said, I'm a sixth grader when it comes to this, and I think a lot of people, hopefully, that are tuning in with us are in that same category where they're really starting to get comfortable with cryptocurrencies and where they're going, because they are, all the rage, if you will, right now. Sure, they were a few years ago, but there have been some change. We're going to talk about that, the regulatory changes, what's that brought in terms of institutions, the products that are out there right now. And then I want to talk a little bit about the events that have happened over the last 6 months, maybe even 12 months. We can go back. The big one, obviously, is the SEC in January with the approval of the ETF on Bitcoin, the spot price Bitcoin ETF. And then what I expect to be one of those things that could kick off another move that's going to take off and really rally not just Bitcoin, but Ethereum and some of those other cryptocurrencies higher. And then finally, I want to get some ideas from each of you as we close out today's session on how people watching can use this information to either trade or get into some of these trade ideas before this happens. Make some money off of the time together. Sound good?
Let's do it.
All right. We're nodding in approval there. So that is good. All right. Real quickly, Bitcoin 101. I'm going to go as basic as it goes. And James, I'm going to throw this one to you. Explain to people, what is a cryptocurrency in general? Not just Bitcoin, but let's go a 10,000 foot view. What is a cryptocurrency?
10,000 foot view. What is the reason? Why do cryptocurrencies exist? So cryptocurrencies were created in 2009 by this anonymous guy who we call Satoshi Nakamoto. And why did he do it? It's because he saw that currency, that government-controlled currency, has a major problem. And you have to understand the history of money for the past 5,000 years. Every new form of money has developed or has evolved to solve the problems of the prior form of money. So first there was bartering, and then we needed to have precious metals to kind of, solve the problems of bartering. Like you can't, there were too many ways people were transacting. I can't buy rice with a pair of shoes if I have, if I want too much rice. There was too many exchanges or ways to, trade things. What if I didn't have the right, things to barter? So barter had to go away. Gold was created, gold and silver and precious metals. But then how do you carry around all this gold if you have a lot of gold? So goldsmiths used to take everybody's gold and give an IOU. And that IOU was the beginnings of paper money. And that evolved into government-controlled currencies like the dollar or the peso or the yen or whatever. And paper currencies then went off the gold standard because countries had too much debt. They didn't have enough gold to pay down all their debt, so they had to take their currencies off the dollar. And now what was the problem with the government-controlled currencies is essentially we don't know how much dollars there's going to be. The government could print dollars as much as they want. In March of 2020, for the next few months, 40% of all the money created in history was created in those 4 months because the U.S. printer just kept going and the U.S. government just kept printing more and more money. So the value of the dollar in your pocket was reduced by someone you didn't know, the Federal Reserve. So cryptocurrency was created to basically avoid someone else that you don't know determining how much your money is worth. Also, cryptocurrencies, because of the digital aspects of it, it can't be forged, it can't be hacked, you have privacy. Well, by the way, when you make a dollar transaction, every government agency knows you just, spent X number of dollars on an Uber or whatever.
Right.
So you have no privacy when you make dollar transactions, particularly credit card transactions or whatever. So crypto has privacy, no forgery, no government control, no centralization, no fees in the middle. Like if I wire Ian money, let's say Ian's in England, I wire him money, it has to go through, 6 different banks before it gets to him, and there's transaction fees and the potential for human error every step of the way. With crypto, there's none of that. So
Okay.
in general, it solves all these problems.
Okay. So if I think back to the, the 1600s and the tulip mania and the, when people were trading tulip bulbs, this solves the problems that have been around since then. If I take what you said and put it into one can, it really gets us to where we can transact something, as you said, that's private, convenient, and stores that value efficiently. Is that correct?
Yeah. And people say there's nothing backing it. Like they say the US government is backing the dollar, or, other currencies have things backing it. Well, there's over 1 million man hours of coding in Bitcoin. Bitcoin has a lot of functionality other than as a currency. It can be used to create software programs, for instance. So there's a huge amount of value backing Bitcoin.
Okay. Let's bring the other guys in real quickly, because I've got a question that now that we know kind of the general state or the general idea of what a cryptocurrency is. Let me ask you something from 20,000 feet of each one of your opinions. Where do we stand right now in terms of the cryptocurrency markets? And I'm talking about everything. When I look at Bitcoin, when I look at Ethereum, and think about the altcoins, and we're going to get into a conversation on that. But if you can just express where you think we stand at this moment in this market.
Sure, I'll take this one.
Go ahead.
Okay. So Bitcoin and associated cryptocurrencies have gone through many cycles, 3 cycles in particular. And I believe we're in the 4th cycle. Some people say it happens around the halving. I believe it's more of a function of human behavior as the greed and fear pendulum swings. Phase 1, I'll tell you where we are when I explain these different phases, but phase 1 begins at the end of the last cycle. So we don't really know where this phase actually begins or the other one ends, because the phase begins in the middle of a price discovery when Bitcoin is reaching new highs. And as we know, it tends to go further than rational minds can believe that it can actually travel. A good example of this, I remember in 2017 during that bull market, everyone thought that we'd be, in the summer when Bitcoin is trading around 5,000, the price projections were like 10,000 by the end of the year. We got to $20,000 by November. So it goes a lot further and faster than our brains can contemplate. Phase 1 ends at the end of this whole move. So it begins at the peak price and then it ends at the bottom when the newcomers who have come in during this cycle sell their cryptocurrency to other people. Phase 2 begins basically at the bottom. The price will move up a little bit. It'll move sideways for 1.5 to 2 years. I believe this is the most important phase because every day that Bitcoin and other cryptocurrencies are trading, there are investors who don't see the long run potential that are selling their crypto assets to people who have a longer term view and are longer term believers. The longer this phase lasts, the higher the price will rise. The reason for that is people who sit on an asset for a number of years are less likely to sell as soon as it moves up 20 or 30%. And then as the price starts moving, we start to enter into phase 3, which I call the expansion phase. This is where we are right now. The price has already eclipsed the old cycle high above 70,000. The pullbacks in Bitcoin have been shallow. We're holding, near all-term highs. That's why I think the price is going to move past 70,000 within the next 6 months and move up to new highs, 100,000, potentially 150,000. Last thing I'll mention about the expansion phase is that the people who have been sitting in Bitcoin for 1.5 to 2 years, like I said, they're not sitting in the market waiting for 20 or 30% gains because they know in the past cycles, they've seen Bitcoin go up 10 and 20x. And at the same time, you have people who FOMO in feeling like they're going to be missing out. At the same time, those holders are least likely to sell. And there's this phenomenon, which I'm so fascinated by in crypto, is that when an asset is moving 20 to 30% a week, most people, a rational person would start liquidating some of that asset. But, in crypto, it's very, as Sam said before, very degen, where it's like people start buying more of it and they don't sell, thinking that if they made 30% this week, well, if they hold for 2 more weeks, then they could double their money or triple their money. And so it becomes like a very self-reflexive asset.
Okay. Well, you mentioned Sam. Let's go to Sam. State of the crypto market. It sounds like, Ian, if I can just take a little, it sounds like you're saying the market has accepted Bitcoin, right? And we're in that acceptance phase where it's just becoming mainstream. If I wrap that up, is that correct, Ian?
Is this to me or Sam?
Yeah, that's to you. I'm sorry. I just, for some reason, I wanted to get that out. It sounds like we really have accepted, by what you just described, the market has accepted cryptocurrencies, and that's why
I think that. So I think that the biggest force in this phase, in this expansion, is this idea that Bitcoin now becomes a part of a diversified portfolio. And for people who bought Bitcoin 10 years ago, when it was this uncontrollable, rampant volatile asset that you made or lose 50% on a daily basis, the fact that BlackRock is talking about adding to their strategic income fund 1% position, to me is just unfathomable. So maybe not to James, because I know he's been bullish on the sector for a while, but it's crazy that we're revising that standard Markowitz portfolio theory to include cryptocurrencies as well as commodities, fixed income, and stocks and other assets. So
you're killing me, because now you're getting ahead of me, but that's exactly where I wanted you to go. Sam, I'm sorry I cut you off. How about your state of the cryptocurrency markets?
Yeah, so look, it's confusing. It's confusing for me. So God knows what people that are watching are thinking about all this. James is talking about, government controlling your money and the evolution of money and gold, which is, it's correct. And Ian's talking about phases of we're fourth, it's the fifth phase if you've been around long enough, but that's another long story. It's confusing. So God knows what people make of this. They see the SEC trying to take action against cryptocurrencies. They see Trump talking about how Bitcoin needs to be made in America now. People probably have no idea about half the things we just said and have no idea what to do. So it's very confusing, but that's why I think it's really important that people take the time to listen and learn. And something, I can't remember who said it, I'm sure you guys probably know, but you got to do the homework. When you go back and you go to the core fundamental principles, and I talk about Bitcoin because that's what really started all of this. And the origins of Bitcoin even precede 2009. They go back into the 70s and 80s around cryptography, the cypherpunk movement. And what came out in 2009 was a result of decades worth of frustrations with the monetary system. So at its heart, Bitcoin is an alternative monetary system, right? And you can call it what you will, property, energy, currency, whatever. The tricky part, and this is where most people really struggle to understand what it is that it's a whole bunch of different things. It is not just one asset. We shouldn't just pigeonhole it into something because it's new. When something new comes along, we go, oh, it was like that, or it's like this, or it's like that. It's like, well, it can actually be all of those things. So fundamentally, Bitcoin is a new kind of asset that people, and it's 14, 15 years old now, it's still new. The important thing is that, and Ian just touched on it, it's now becoming a core part of a portfolio for a lot of people. But you kind of have to understand what its core principles are. Decentralization, away from centralized control like the Fed and the Bank of England and all the other central banks around the world, and politics. This is about liberty and freedom and proper democratization of money, of assets, of property, of ownership. Then when you kind of get that under your hood, you start to go, oh my God, you have the aha moment, the light bulb moment. You go, well, if this is so significant, and I'm talking about a change in how we transact and all of those sorts of things, this is going to be around longer than we are all alive. People start to go, well, maybe it's relevant for me, my kids, their kids, and for generations. That's how you go down. That's how you get what people call orange pilled, is you go down that rabbit hole of understanding what this is long term.
Love it. I love the fact that you point out that we're still so early in the cycle as well, and getting the education. I mean, that you can be confused and you're an expert in the area. I love that. All right, James, state of the
Yeah,
cryptocurrency market.
I agree. I think we're barely in inning one of Bitcoin and crypto, and I'll say crypto because again, I'm a believer in the whole crypto market. But it's hard to buy a Bitcoin. Like, it's 15 years later. It's if you want to, if grandma and grandpa in Main Street America want to buy a Bitcoin, they're going to be like, forget it. I don't know what I'm doing. I don't know how to do it. It's hard. And forget about buying like Ethereum or then going into the altcoins, because now you can buy Bitcoin with these Bitcoin ETFs on the stock exchange, sort of buy Bitcoin, but you can't buy. It's really hard to. It's complicated. You're gonna buy it on Pancake Swap and then use a hard wallet and put it in your safety. Like, it's complicated. So I think we're in inning one of the whole crypto world, and there's so much functionality to crypto, but we're not using it yet. We're barely using crypto as a currency, which was the original intended use. We're barely using it for any of the new uses, like using the parallel computing aspects of crypto, or using some of the decentralized finance aspects of crypto. So one thing's for sure is that crypto's not going to stay at the level it is today. Right now, it's trading around $65,000. In the long run, or Bitcoin is trading for that. In the long run, it's either zero or it's millions, because the functionality and use cases for crypto are enormous. So either people use it and it gets to millions, or it just whatever. It doesn't become anything. I personally believe, it's gonna be the higher number. One thing to keep track of is, when will there be a billion users of crypto? Right now, maybe around the world, there's realistically be between 100 and 200 million users. But if you think about the internet, the World Wide Web, it wasn't until 2005 that there were a billion users of the web. And that's when you could think back, that's when everybody was comfortable putting their credit card in. That's when we had Facebook, Google, social media. That's when everybody was really fully, firmly using it. And we're going to see that tipping point in the next few years for crypto, but it hasn't happened yet.
That's an amazing point. I love the 2005 reference. Real quickly, since you brought up technology and looking back at 2000 at the internet, the explosion of the internet and how that took time. Right now, a lot of people look at AI and they start to think, and I don't want to go down an AI rabbit hole, which I know all four of us can do right now. But is that going to help to, press on the accelerator in terms of what you just mentioned, James, getting us to that acceptance where everyone is now using Bitcoin? You think AI plays anything over the long run?
I don't think.
Oh, go ahead.
I think they're two different.
Yeah.
They are two different technological innovations. They're both amazing. Like AI, as opposed to crypto, and even as opposed to the internet, AI, the reality is actually greater than the hype. Like the reality of AI could do more than people are even aware of right now, even more than all the greatest hype about AI. Crypto is still, the hype is still happening. The use cases are out there, but they haven't started happening yet, which is why, regardless of the trading, how you're trading it, we still need it to be used. And again, I believe it will be. The use cases are amazing, but it's not being fully used yet.
Okay, cool. So here is my fear. Go ahead, Ian.
I just wanted to chime in that I think with AI, imagine like AI is giving a level of intelligence to machines that they haven't had before. And it's going to facilitate a lot more machine to machine transactions. And I think that many or the majority of the blockchain use cases in the future aren't going to be like person to person, like Satoshi Nakamoto outlined in the Bitcoin white paper. It's actually going to be machine to machine. And, these could be trivial things like, let's say we have roads that are just dominated by self-driving cars. And let's say, your self-driving car knows that you have to be at a certain place by a certain time. There could be some type of blockchain-based system where your self-driving car can communicate with other self-driving cars in a way that they can engage in some type of commerce or transaction without having a middleman and without having any economic history, any prior economic history, which is one of the fundamental breakthroughs of the blockchain. And so I think as AI starts to proliferate through society, I think there's going to be a lot more machine-to-machine payments that are going to be blockchain-based. And I think that's going to be a big use case for crypto.
Love that. Actually, since you brought blockchain in, Sam, did you have any additional comments to that? Did you?
Yeah, I'm trying to not go too deep down the rabbit hole just because of, like I said before, it gets real confusing, right? What Ian's talking about there is that it commonly referred to in the industry as decentralized infrastructure or DePIN. And that sort of thing is in development. It exists. It's been tested and tried for a long time. This machine-to-machine payments and things like that. And I agree. I think we will definitely have that kind of thing, and it'll be enhanced by AI. Mainly because if you break AI down to its core principles, it's data. It's all about data, how fast it moves, where it moves, and how it's analyzed and processed. It can get a little bit more complex than that, clearly, but at its core, it's about data. So machine-to-machine, blockchain data, how things transact, automation of all of that. That's definitely a very big thing long-term about it. But then back to James's point as well, what we are talking about here is something that is fundamentally going to take a very long time to roll out. Like to get something like Bitcoin to be useful as a currency, you need a circular economy. If I got a box of cornflakes upstairs, I got to be able to pay for my cornflakes at the supermarket in Bitcoin. They need to pay Kellogg's to get the cornflakes in the shop. Kellogg's are paying, the corn producers and all that, for the materials. They need to pay for fertilizer and for the fields and for the tractor and for the however they want to power. You need a circular economy. That doesn't happen in 10 years. That doesn't happen in 20 years. That probably happens in like 200 years. So this is when I'm talking long term, there are opportunities short term, like what Ian was talking about. And if we're talking about circular economy for cryptocurrencies, this is multi-generational stuff. So people need to understand that's the kind of impact that this is all going to have on the world.
Okay, great. You know what? Let me go to another side of this. We're talking about how great it's going to be, but everybody's got some fears, including myself. Ryan's going to bring up my screen and show you something that I think we've all seen. There are the people out there that are, call them doubters, call them haters, whatever you like. Jamie Dimon's been one of those big ones, right? And this is from April. So, and I find it curious because JP Morgan now has a cryptocurrency desk, but he's making a point here. And I want to kind of start delineating between, because it sounds like everybody agrees, and you can give me a nod of the head or a real quick yes, but it sounds like everybody agrees that cryptocurrency is going to be part of a model portfolio for the average investor moving forward. Yes?
Yeah, I agree.
That's a yes. All right, good. So when we have Jamie Dimon, somebody who's listened to quite a bit, talking about a fraud, a Ponzi scheme, he's called it a pet rock. This gets down to that point where and I'd like for someone, let's say, I'm going to throw it Ian's way real quickly. Proof of work versus proof of stake. And that's why I love the fact that Sam, you brought up, both Ian and Sam brought up blockchain, because one of those has to do with blockchain and the other one doesn't. Is that going to be something that separates Bitcoin from Ethereum moving forward?
Not necessarily. And the reason why is, so what we discussed before, that Bitcoin is a form of money. And you talked about how James mentioned how money has three, prepositions or three things it must have, three necessities. It has to be a unit of account. It has to be a medium of exchange. It has to be a store of value. Bitcoin was the first cryptocurrency. It fulfilled all of these properties. I didn't really get excited about cryptocurrency till Ethereum came along, because my view was that programmable money was the future, right? Not this like store of value, this computational store of value that Bitcoin was, that converted energy into some form of digital asset. And what we're now seeing is there is a rise of what are called layer one and layer twos on top of Bitcoin. So imagine a world where fiat currency runs amok. Countries can't pay down their debt, so they have to keep printing more money. Bitcoin takes over as some form of global reserve. And now with the different types of Bitcoin layer 1s and layer 2s that are unrolling, you can build financial primitives on top of it. You can build a new financial system on top of Bitcoin. And, this is the first cycle really that this has actually become, something worth noting because it hasn't in the past. So I think that, at the end of the day, like Ethereum and Bitcoin will have very similar use cases in the sense that you can build the same type of stuff with Bitcoin that you could only previously do with Ethereum.
Okay. Go back to Bitcoin and Ethereum.
Can I address this? Can I address
Yeah,
this,
absolutely, Jamie. Go.
So Jamie Dimon is a fraud and a Ponzi scheme. Like, first off,
There we go.
Why is he saying this? He's saying this because when you have Bitcoin and when you have cryptocurrencies, you're your own bank. Like, you basically get to decide what happens to your money, and you don't have to save it and pay all sorts of fees to some bank. You don't have to put it in a savings account, and you control your money when you have cryptocurrency. So it's competitive with banks. So of course he hates it. So he's speaking out of his own interests because cryptocurrencies are anti-banking. Second, a bank is a Ponzi scheme. You put money in a savings account, and then they take your money out of the savings account and they lend it to people who want to buy a house. If people stop paying back the money, then everybody in the bank loses their money. Or if people stop putting money in the savings account to keep the cycle going, everybody in the bank loses all of their money. So banks are almost the definition of a savings account, of a Ponzi scheme. So, I'll just add that.
Okay. No,
I want to jump in on that too, just because people don't understand. And James is bang on the money there. The banking system is known as a fractional reserve system. Fractional meaning there is not enough actual money in the system for everybody if they wanted it. That doesn't happen with Bitcoin. We know how many Bitcoin there are. If you've got it, you've got it. Jamie Dimon can't take it away from you. He sure as hell can close your account without you wanting to. In the UK, we just went through a huge thing where a prominent politician, Nigel Farage, had his bank accounts closed because the bank didn't like his views. That is really happening to people. We saw it in Canada with the truckers. They had their accounts closed because of people like Dimon and others that hold such power in the financial system going, nah, we don't like your views. We're going to shut you out. They can't do that with Bitcoin. That's why it pisses them off so much.
So if it's interesting, and I was going to save the conversation for institutional money getting into the market, but let's open that up right now. If these institutions, JP Morgan, Goldman Sachs, et cetera, are getting into the cryptocurrency markets, and we've got obviously the ETFs, does it start to muddy the water on what the best way to buy a Bitcoin or let's say Ethereum is? Each one of you, I'd like to go all around the horn on this one. What is, just that simple question, what's the best way that I could buy or one of our viewers could buy Bitcoin or Ethereum right now? Is it one of the new spot ETFs, or do you stay away from them because they are institutions, right? iShares has the largest one. Let's start with Ian.
I think it depends on your financial objectives, right? So if you want exposure to Bitcoin, but you want exposure in a retirement account, there aren't many retirement accounts that let you have the physical or digital asset. So in that case, you would want to buy a crypto ETF. I always advise, if you can, just buy the real thing. And I think that the custody of Bitcoin has really evolved in the last 10 years. Like 10 years ago, it just would have been unimaginable to have too much Bitcoin hosted on an exchange. And there are still many exchanges around the world you don't want to have a lot of your crypto assets on. There are web wallets, which are dangerous because you can get hacked. I think personally, the safest place is owning it on Coinbase, which is, again, reliant on a centralized structure, and then keeping it in one of their vaults. So if somebody tries to hack into your crypto assets or gets your wallet address or a password to your Coinbase account, you would have to go through a cooling off period before they could actually move that cryptocurrency. And, and then obviously there's like cold storage hardware wallets, but I think that there's a lot of vulnerabilities for that. Like, you might forget your seed phrase, or their institutional programs have set up to kind of help with larger Bitcoin holders, but for the smaller retail investor, I think Coinbase and a Coinbase Vault is the way to go.
Okay. How about Sam? Thoughts?
Yeah, look, this is tricky because a company like Coinbase is very beneficial to the space to help people take that first step into cryptocurrencies, predominantly Bitcoin. Ian's right. If you're wanting exposure just in your retirement account and you just want to make dollars or pounds or whatever your currency is, then yes, something like the ETFs are great. They're a financial product or a financial institution based on the legacy financial system. If you want Bitcoin, just get Bitcoin. You can get it through Coinbase. You can take it off of Coinbase and you can self-custody that asset. That is terrifying to do that. And I can speak firsthand how terrifying it is the first time you take that self-custody of an asset. We've been indoctrinated our entire lives to believe that we should be trusting financial institutions like banks. They have not returned that favor. And this is the breakdown of trust, which is why something like Bitcoin even exists. If financial institutions were trustworthy and did what they were supposed to do and looked after us all, we wouldn't be having this conversation, but they don't. My view is that if you want to access Bitcoin and you want to hold Bitcoin, get Bitcoin in your self-custody in the right kind of way. And then no bank can shut you out. No, not even Coinbase can shut you out. And I know there are fail safes and there's a whole bunch of things that make Coinbase great for the industry. Fundamentally, if you want Bitcoin, get yourself Bitcoin and don't worry about financial institutions.
So you're saying put it in your pocket, and I use that loosely. Put it in your cold wallet, right? Basically, have it yourself.
Yeah.
Maintain it
And
yourself.
there are ways to do that that are terrifying to start with, but once it's like, do you remember when we first had tap and go with our debit cards, right? And people were like, oh no, I'm not using that because it'll get nicked and someone will just go tapping everywhere, just stealing my money endlessly. And that never happened. And now you use your smartphone to do it. It's a similar process. We've got to break down sort of what we've always only ever known and go, okay, well, maybe self-custody is a much better way of holding an asset like Bitcoin or other cryptocurrencies. It's difficult. I don't want to underestimate.
Yeah, I agree. It's difficult.
Should be done.
I would say really quickly on that, it's as if you own, let's say you have one Bitcoin you want to put in cold storage. Imagine having $64,000 of gold in your house and burying it in your backyard and writing yourself a little treasure map to go find it and then hiding that treasure map somewhere in your house. Like, there's just way too much vulnerabilities. I mean, I feel like I'm going to hit my head someday and like forget, where like I have anything in the house. So the cold storage thing is definitely not for the faint of heart.
Well, I'm actually going to use James's reference to 2005 and the internet, because you would expect that cold storage would be one of those things that we start to get used to. James, with that in mind, what do you think the best way to buy and hold Bitcoin is? Or Ethereum?
If you're just starting out, okay, it's easy now. Because of the Bitcoin ETFs approved in January, just a few months ago, this creates a whole new era for Bitcoin. Anybody can now buy it just by calling up their broker or using their online trading account and buy Bitcoin. So that's the way I would do it if I was just starting. And by the way, Ethereum, none of the other cryptos are there yet, but Ethereum's going to be there soon. And then eventually the altcoins, all the other coins that are out there will be there. So that's the way I would do it if I was just starting. If you're getting a little bit more sophisticated, Coinbase has plenty of good coins and tokens on there. And Coinbase is not quite as easy as a brokerage account, but it's almost as easy. I want to get involved in I'm one of the people like pre-2005 internet here. I want to get involved in the cold storage because it's just like, what am I going to do? Put it in a safety deposit? What if I lose the key to my safety deposit box or forget some password or whatever? Then you're in trouble.
Right.
So I think one of the things that has to happen with crypto it's both a problem and an opportunity because companies will be created to do this stuff. Crypto just has to be easier. And that's what happened with the internet. Okay, it was hard to make a website at first. Then there was WordPress. It was hard to make an e-commerce store. Then there were, plugins that made e-commerce easy, or there's Gumroad that you could set up a store in just 2 seconds. So the same thing's got to happen with crypto, and it'll happen. It's happening already, but it'll happen more. But I would just, if you're just getting started, just buy an ETF like Bitcoin, the Bitcoin ETFs on a stock exchange.
Okay. Yeah, it's ironic because I think about the simplest way. I'm that guy that wants to think of the easiest way to do something, and I think you've all hit on it. Buy one of the spot ETFs, keep it in my Schwab or whatever account, and I've got a card. If I want to spend some of it, I can spend some of it off that and just liquidate the ETF at some point. So maybe that's the simple guy's way to do it. Let me explain one. And so you've each mentioned altcoins once, so let me kind of breach on this because this is one of those things that really scares me, and I think gets to the point why there's still a lot of people that don't jump in with both feet into the cryptocurrency market. I've got an article here, and this is actually from yesterday about the crypto winter and $440 million that was lost in altcoins, right? Liquidations of altcoins. And then, as if somebody was trying to set me up for this, we didn't know this was coming. I see Barron Trump and Mr. Skrilly from, I forget when he got out of jail for, his pharmaceutical mishaps there. But the new DJT coin, apparently they're behind it. When I think of altcoins, here's where my question is going. We've been focusing on Bitcoin and Ethereum. When I think of altcoins, that's like the pink sheet of the stock market. That's the way I think about it. It's the thing that I know nothing about. It's the true speculation. If somebody wants to approach or they're curious about the altcoin market, is there a good way to go about getting into that besides just somebody told you about something at a cocktail party or something like that? Sam, let's start with you. You've got the biggest smile on your face.
Yeah, this stuff cracks me up, right? Because it's been going on for over a decade now. And if you want to get started in altcoins, here's the hot tip: stay off social media. It's look, all right. So best way to explain it, when I remember doing I did a conference in Sydney back in, I think must have been 2013. And I was amazed at the time that there were 80 different cryptocurrencies available at that point because it had all come from Bitcoin. And then towards the back end of 2013, we started to see altcoins become a thing. Funnily enough, proof of stake existed long before Ethereum ever did. Another conversation for another day. So now I saw something the other day. There are 2 million different types of cryptocurrencies, and they're all altcoins. And I laugh because I can't actually repeat live on air the names of some of these cryptocurrencies because they are quite literally kids in a bedroom launching cryptocurrencies and aiming specifically to rip people off. So that's what gets the headlines. $440 million in liquidations, all these big numbers, and you've got, regulators going, it's scams, it's fraud, all this sort of stuff because they're seeing that. And frankly, no one in their right mind should go anywhere near any of that. There are plenty of altcoins out there in the market that are easily available through major platforms like Coinbase, like Kraken, that go through appropriate vetting before they even make it onto those exchanges. Yes, there are some that slip through the cracks, but stay the hell away from any of that kind of stuff that you see appear anywhere.
Well, let me throw that and take that one step further. James, we've got the regulators that are coming in, the SEC, CFTC. Is that a good thing now? Now that we read these articles, we see these headlines, there are some good things in the altcoin market. Is this going to be a good thing to the regulatory bodies that have taken this on and they're trying to set some sort of standards? Should investors feel better about these things not happening?
Yeah, and it's sort of a different question than the altcoin question. So yes, regulators are good because there's a lot of scams out there. I mean, out of those 2 million potential altcoins out there, probably 99.999% of them are complete scams or are going to zero or have no value. And so just on altcoins specifically, if you're thinking of investing in an altcoin, make sure it has a real problem that it's solving. Make sure there are actual users. Understand who the developers are and the people funding it are. Like, have they developed other coins? Do they have good track records and so on? Does this coin have real customers? So just as an example, I'm not recommending this, but like Render, which is a token that renders videos, has Sony and Disney using it. So it's a real thing. Whether or not it has any value, who knows? But it's a real thing. Most coins are not real things. And if you want to get into the altcoin space, yes, start with something like Coinbase, where there is some vetting of coins. And again, it's fairly easy to buy. You don't have to go to some obscure, no one's going to get fired using Coinbase to buy a coin. But if you use Sushi Swap to buy a coin and it goes crazy, then you might get fired because somebody who doesn't know these things might say, why did you use something called Pancake Swap or Sushi Swap? It's a weird sounding exchange. So in terms of regulation, though, that's a great thing because people are nervous. In 2018, which was kind of like the last big run up before the one in the past couple of years, everybody was worried, what if the US makes Bitcoin illegal? So everybody was asking this about US is going to make Bitcoin illegal because it competes with the banks and it competes with the dollars. Well, now it's pretty clear. Guess what? The US is not making it illegal. In fact, the SEC approved Bitcoin ETFs. The SEC is the biggest enemy of crypto, and yet they approved Bitcoin ETFs. They've tentatively approved Ethereum ETFs. So this is all a great thing. It gives foreign governments, it gives retail investors confidence that they're not going to lose all their money if they buy crypto. So I think regulation, what makes the dollar so great compared to other currencies? Yes, the US is the strongest economy, but the dollar is great also because it has the most transparency of any currency in the world. It has the most regulations around it. So regulation gives people confidence. Whether it's necessary or not is another story, but it does give people comfort and confidence that they're buying a legitimate asset. And regulation tends to be going in the crypto world's way. Like, again, the Ethereum ETFs were just tentatively approved. Also, a big deal that hasn't really been reported that much is, the SEC's kind of concluded Ethereum is not a security. So that's a good thing. That I won't get into the weeds of that, but that's a really good thing. That's been a debate for the past 5 or 6 years. So regulation is a good thing overall.
Good. And Ian, I assume you agree with that? You had a pretty big smile when I put the first question out there.
It's just funny how quickly the political winds have shifted in crypto.
Yeah.
Just going back a couple of years when Gary Gensler took over the SEC, many people in the crypto community were excited about this because Gensler had taught a blockchain crypto class at MIT. But then very quickly he became, the antithesis of like the crypto community. And he was the evil guy. A funny thing happened about a month ago. Trump was at Mar-a-Lago and there was a gentleman, a young kid, probably like in his early 20s, wearing a pair of Pit Vipers, which is a popular pair of sunglasses for Solana users, and asked him about crypto. And, Trump even said, yeah, the kid with the goggles. And he said, are you going to like loosen the regulations on crypto? And Trump gave his kind of boilerplate, yeah, we're going to make crypto in America. We're going to make it great again. Since that time, the total crypto market cap has gone up about $500 billion. And, what we saw was the crypto community, which is raising a lot of money for a super PAC. I think they're up to about $100 million right now, called Fair Shake. Started to become more influential in down ballot races. I saw recently they gave $2 million to a race in New York. And the Biden administration is now like pivoting full circle. And James mentioned the Ethereum ETF. They said Ethereum is not a security in their lawsuit against Consensus. Then we also are hearing that the Ethereum ETF is going to come as soon as early July. And it's funny because now it's like both presidential candidates are trying to be like the most degen possible, which is a crypto term for somebody who's gone full crypto. But it's like nothing that I would have imagined even 2 years ago, where, this feels like it's going to be the crypto election in early November because of how much weight crypto now has and how popular it is among millennials. There was a survey released recently where millennials say their favorite asset they think to make great wealth in is real estate. Number 2 is crypto. Stocks was like 4th or 5th. And that just goes to show you, if you're the incumbent administration like Biden is, and you continue to vilify crypto and crypto holders, those voters are going to go elsewhere. And this election is going to be just as tight as the last one. So, I think that at the end of the day, it's very, very bullish for crypto, having both sides of the aisle being pro crypto.
Yeah, you know what? It's funny when we talk about regulatory involvement, and then I always say that's going to lead to the institutions, and we've seen this. And we don't really need to answer questions, but one of the things each one of you have said is just that independence that different cryptocurrencies give the investor, right? It gives them all these different independence. And when I think of institutions getting into the market and regulatory bodies getting into the market, it's almost like we're getting into that cycle where maybe it's not going to be as pure as it was 5 or 10 years ago. I mean, I look at, just to put a little bit of a timeline on it, if you look at what happened with GameStop over the last month or so, and AMC, and you see how during each one of these pops, of that meme stock move in each one of those companies cashed out when they had those higher prices by selling shares. Well, guess what? When you go back to it, Ian, you were on a trade desk. The institutions were making money off the sale. They get money from those sales, right? So it's always that thing, and I hope it's going to stay pure in some way with crypto, and not go into the hands of the institutions. Anybody have like a little comment on that? I didn't want to go down the rabbit hole, but that's my fear. Is this going to remain pure?
I've got a great comment on that.
What's that?
I've got a great comment on that.
Yeah, go.
You're right. I've called it before the bastardization of crypto, because
there you go. Yeah,
people, you've got to remember, these institutions, they just want to make money. They're not your friend. They don't care about Bitcoin or crypto. They want a product they can sell you. The ETFs, they're making fees, right? They're not making those fees in Bitcoin. They're making those fees in dollars, so they can generate profits for their shareholders. That I want to hope that means that people then go down the rabbit hole somewhat, and then they start to learn what it's all about in a more meaningful and impactful way, because that then gives them a chance to step out of the system. And that's fundamentally what Bitcoin and crypto does. It gives you an opt-out of the legacy system. So regulation is okay if they know what they're talking about. And thus far, I have not seen a regulator in the world prove that they know what they're talking about with any of this.
Yeah.
They need to write new rules and new regulations, not adapt things that have been around for the last century. No one has been proactive in that sense so far. And regulation can be good, but at the moment, I don't think it's great at all, to be frank with you.
Okay. Well, let's go back to some timing. I love that. And Ian, of course, I was curious as to what you would say on that, because you were part of that, the institutions working on those trade desks. That's just one of those things that's really stuck out to me as we see regulators moving here.
But like Wall Street is not one monolithic entity, right? So there's buy side and sell side, and we're talking about BlackRock or Fidelity or Vanguard. They're custodying your assets, right? So the $12 trillion that BlackRock has, it's like my money, your money, everyone else's money, pension funds money, and for them to embrace crypto, like, it's great for the space. I think I understand what Sam's saying, and it's true. If Wall Street sees an opportunity to make money in something, they're going to. One last point on that. It seems like every new technological development we have in the financial system that facilitates a way to extend more credit, right? And so I would posture that a lot of these DeFi protocols allow you to get more leverage than you could in traditional markets. And throughout history, this has led to a bubble. The securitization bubble we saw was because we started having software programs that could break down mortgages and package them and securitize them. sell off the, I don't want to get too into it, but, change the way risk was marketed. And I do think that when Wall Street sees what's happening in decentralized finance, it's going to lead to another bubble of sorts, because, it's like we can't understand or contemplate the way like new technology hits financial markets. It's happened over and over again, throughout humanity, just by being able to extend more credit in a way that we couldn't by skirting around traditional or prevailing regulations.
Right. Yeah. Regulations. This is actually a great.
Again, though, the one thing about regulation, though, is that it just gives people comfort that authorities are looking at this. Mm-hmm. Again, because we're in inning one, we're not yet at the point where hedge funds are packaging up, 50 slices of derivatives in different ways and using 100-to-1 leverage to do this. We're still at the point mom and pop are just figuring out how to buy a Bitcoin and are just afraid to dip their toes in. So we're still really early, and the sovereign wealth fund of Dubai is not going to buy crypto in the U.S. if they think the U.S. is going to make it illegal. Authorities have stepped in now and said we're not going to make it illegal, so this gives people comfort.
Yeah. Well, let's go to some timing here, because if you look at what's happened here, we've had regulators that have approved the Bitcoin ETF. We've got, everybody's pointed out, Ethereum is right around the corner. You've got options trading that they're talking about sometime over this summer on the Bitcoin ETF. The halving, which we've got a chart that Ryan will bring up here in a second. That's one thing we haven't talked about as one of those big events. And typically, the experience. Why don't you guys explain this to me? First of all, let's go back to James real quickly. Explain real quickly to everybody what the halving is and why it tends to make these huge jumps in Bitcoin.
So whenever a Bitcoin transaction occurs, if I spend a Bitcoin on something, that transaction has to be validated. It has to be proven to be a real transaction. I spent a Bitcoin that was previously spent by someone else, going all the way back to the first transactions by Satoshi. So that requires something called a miner to validate the transaction. Why does a miner do these? They don't do it for free. They get a reward every time they validate a transaction. Now, those rewards every few years are cut in half. That's the Bitcoin halving. Now, why is this important for the markets? Well, Bitcoin, as we know, uses a lot of electricity. So if all the rewards, or like 90% of the rewards that Bitcoin miners make, they have to sell almost immediately to pay their electric bills. Well, if the rewards are cut in half, then there's less forced selling of Bitcoin every day. And when there's less selling and there's equal demand, as a function of supply and demand, price goes up. So that's why the Bitcoin halving has historically increased the price of Bitcoin, because there's less selling. But now the reward is so little that maybe it won't have the same kind of impact that it normally does. And so we don't really know if it's going to have the same effect. It's already had its effect, by the way. It went from 30,000 to 70,000 in anticipation of the halving. So that was pretty good.
Well, was that in the anticipation of the halving, or was that because of money flowing into Bitcoin because the institutions are now putting money into the ETFs? We've really kind of uncorked the bottle on Bitcoin over the last 6 months, right?
Yeah, and look, then there's going to be Ethereum ETFs coming up and Ethereum upgrades. Like, there's nonstop catalysts happening. So the Bitcoin halving was just one catalyst among many.
Right. And then, I like to point out, and we kind of talked for a few seconds before we went live here. Not only did you have the halving, which is usually a bullish event, but we've got, and this is where I think it gets curious, because we saw a couple years ago as we were heading into a bear market, we saw people start to use Bitcoin as a safety trade, a little bit of a shelter from a storm. You saw bonds start to go down, not to get too off track on what was going on in the market, but you actually saw Bitcoin start to move with a high degree of correlation with gold. It turned into, that protection trade. With a lot of people are looking at the elections that are going to happen in November and saying, hey, we're going to have a lot of uncertainty. The market hates uncertainty. I don't care what it comes from. Uncertainty is investors' arch enemy, right? With that, you've got another catalyst that's going to happen. And, in July, you can put a pin on a date and say, well, we've got the RNC that's going to happen. And you can officially start. We've got debates coming up this week, next week, between the two candidates. So you could see a little bit of a protection trade. You guys see this confluence of events as being something that is really going to just take the top off of not only Bitcoin, but Ethereum? And if so, what are your target prices over the next 12 months? Ian, go. Sorry, I should have given somebody the go there. My bad.
I think that in the longer term, it probably becomes more of a risk-off hedge type asset. Throughout most of Bitcoin crypto's history, has been highly correlated with growth stock investing, and the reason why is because crypto sits on like the very outskirts of like the risk spectrum, and the same type of people who are buying Tesla and Apple and Microsoft and momentum stocks also buy crypto because they have more of a penchant for risk. And I think that still will continue, and it won't all of a sudden be this anti fiat currency hedge, because you also have to think who the buyers and sellers are. Now, in terms of price targets, well, there's a couple things I'm watching. Number one, there was a news announcement a couple of weeks ago where the state of Wisconsin purchased $160 million of the Bitcoin ETF from BlackRock. And it's a very small amount for the state of Wisconsin. It's only like 0.1% of how much they actually have. But for Bitcoin, it's a huge leap because now you have large pension and retirement systems, or you have one at least, that are allocating some of their money to crypto. And I think over time, what I said earlier is that Bitcoin and other cryptos become standard modern portfolio theory, just become a part of it. And if you were to say, 1% of the world's assets go into Bitcoin, that's about a $4.5 trillion market cap, which is about 3 times higher than it is now. Now, 1% of the world's assets don't have to go into crypto. We just have to believe that 1% of the world's assets will go into crypto for the price to actually 3 times where it is right now. So I think in this cycle, we're going to get close to $200,000 because I think this has become more of the narrative and more of the belief system of people that this will be a part of every institutional investor's portfolio at some point in the future. So we might as well just price it in right now.
So this is basically a speculate. I always like to say that, in the case of stocks usually go higher because people speculate that the prices are going to go higher, not necessarily because of fundamentals. You're basically saying this is the speculative market trying to get in before that price point gets achieved, correct?
Right. And the reality is, like, Bitcoin is better off if people don't actually spend it on anything. Like, if you're a Bitcoin holder, you just want everybody else to hold it, because if they're spending and creating a higher amount of velocity, the person on the other end that's receiving that Bitcoin might want to convert it to dollars. So, it's kind of one of these things where it's like, we want it to be like a new monetary system, but we also don't want anybody to spend it. So I do think it'll be a better digital store of value in the future than actually a base, monetary system.
Okay.
Which is why I think the other use cases of crypto are going to start to gain prominence. Like, without getting into the weeds, the tokenization of real world assets, I think that's going to be $1 trillion opportunity for crypto. Decentralized physical infrastructure, where you do, basically you take advantage of the parallel computing features of crypto. That's going to be a huge feature. There's going to be a lot of marketing opportunities when every company makes their own coin. Like, Uber coin is made and you mine it by, riding Uber more. So it'll be kind of like frequent flyer miles that are tradable on crypto exchanges, but for every single company. So that's a $1 trillion opportunity for crypto. So we're going to see a lot of different use cases and opportunities once we hit that billion user mark worldwide.
Right, you got a price target right now, James, in terms of the next 12 months on, let's say, Bitcoin, and I'll come back in a few seconds on some other trade ideas, but it makes me giggle because I want to know what your favorite is. You said Bitcoin is not your favorite, but I want to get an idea of what your favorite is. But do you have a price target next 12 months on Bitcoin?
Yeah, Bitcoin could easily see, let's say, $125,000 to $150,000 over the next 12 months. It could see it over the next 3 months. It could see it over the next 12 months. We'll see. When Bitcoin moves, it moves fast. But
Right.
in terms of the blue chip, oh, go ahead.
No, you're good. In terms of
In terms of the blue chip, in terms of the blue chip coins out there, of which there's only one other, which is Ethereum. I think Ethereum easily sees 10 to 15,000 over the next 12 months. And then Van Eck just put out it's a big financial institution. They just put out a price target of 154,000 for Ethereum, up from 3,500 right now.
So it sounds like you would side with Ethereum at this point over Bitcoin.
Absolutely, because Ethereum is already bigger than Bitcoin in terms of number of transactions per day. More people use Ethereum than use Bitcoin because Ethereum is actually useful for more things than just as a currency. And as was mentioned, Bitcoin's not even that used as a currency because people are just holding on to it.
Yeah. And also to James's point, I'm actually a bigger believer in Ethereum. I do think there will be a flippening at some point where the market value of Ethereum flips the market value of Bitcoin. What people have to understand is that Ethereum is actually a deflationary asset in the sense that when you're using it, when there's lots of transactions happening on it, Ethereum is getting burnt. And there could be a point where we are burning more in a day than we are creating. And that can't happen for Bitcoin, as we know, because of the proof of work consensus mechanism underneath it.
Okay, I saw Sam shaking his head pretty aggressively there. Go ahead, Sam. What's the other side of that?
I mean, the other side of it is Bitcoin is by far and away the best cryptocurrency, digital asset, whatever you want to call it. It's the best one out there. Always has been. In my view, it always will be. It is the first thing to genuinely provide an alternative system, an opt out from the legacy system, like I've said before. James is right. Tokenization of assets, all these sorts of things are absolutely coming. Shameless plug, but I wrote that crypto handbook I started writing it at the start of 2022. One of the emerging sectors I wrote about was the tokenization of assets. Because why should we all pack up and go home at 4 p.m.? Why can't I trade on a Saturday or in Australia or in the UK or in the US? So markets and capital markets are changing. About 4 years ago, I wrote about why aren't football clubs tokenizing the ownership of their clubs to sell to fans? Just recently, the Watford Football Club here in the UK have issued equity, and part of that is a tokenization, a representative token traded on Avalanche. So these things are absolutely happening, and this will continue. By absolutely 100%, we will see continuation of tokenization and decentralized finance, decentralized physical infrastructure, all of these things. If you're talking about an opt-out from the financial system, the legacy financial system, there is no other than Bitcoin. But we also need to kind of take a rational hat here and say, look, if you're a boomer, you've made a truck ton of money over the last 20, 30 years, you probably don't really care about this as much as maybe, say, someone that's 18 and is trying to find their way in the world, trying to buy a house, trying to save in high interest rate, high inflation environment. It's nearly impossible. So you can see the appeal of a lot of this to younger generations. And that's what I think people that are a bit older that have made a lot of money are starting to realize, is that it's not just for them, but it's for other generations to come as well. And we talk about, you could talk about, is your favorite Ethereum or is your favorite Bitcoin, or what's the one thing? It's like, we don't talk about that with stocks. We don't say, would you buy Google or Microsoft and nothing else? We talk about portfolios and having a rounded approach to this. And you should absolutely take the same approach with crypto. My view is that it's Bitcoin that anchors that, and there's a whole bunch of other stuff on the peripheral that you should be looking at and considering fundamentally to get more Bitcoin. And that's, I think, the long-term game. And I think that's the smart approach to take, is that the better asset out there for the long term and for people to continue to want to add to, because I do think we will end up with a Bitcoin standard generations to come, is Bitcoin. Sorry, guys.
Yeah. Okay. Let me press you guys just a little bit more because it sounds like adding Bitcoin and Ethereum. I mean, we talk about model portfolios. My guess is we're going to have that as part of the model portfolios, but not only that, but diversifying ourselves between the two. At least that's the route it sounds like I'm going to be going down as a sixth grader in the room here. What would each of you, with what we're seeing right now, the cusp of these moves that everybody, it sounds like, is expecting? I didn't get a Bitcoin target, by the way, from you, Sam. I got a 125, a 200. What's that?
I can give you one if you want.
Let's go ahead and get one out there so I can put it on the record. Absolutely. Yeah.
Yeah, look, I mean, I've said before, I think this cycle blows the roof off. And we got to
Perfect.
remember that where it currently is right now is like only 10% off Bitcoin's previous all-time high,
Yeah.
which was only set earlier this year. I think we're looking
Okay.
at least somewhere between 350 to 500,000 per Bitcoin in this cycle. Long term, onto a Bitcoin standard, we're talking about possibly a multi-quadrillion dollar system here if you want to convert it into fiat money by then. So
Okay.
$1 million plus is by no means out of the question in the sixth or seventh or eighth or ninth cycle to come.
Gotcha. All right, let's make things a little interesting. I am a stock person. I'm sure a lot of people watching this are as well. And we're not here to talk about stocks, but are there other ways that you would trade the upside in the currency, the cryptocurrency market? Miners are out there. There are a number of different companies. Does anybody have any unique ideas they want to share? Ian?
I generally would stay away from crypto miners.
Mhm.
It's just adding a layer of complexity to something that's very simple. And there's also idiosyncratic risk. So it's like you don't know how much debt the miners have, and you don't really understand their cash flows. If you're not like a CFA level 3, like I would just stay away from the miners. And they tend to not perform as well as the underlying cryptocurrency. So if you have that asset out there, that crypto asset that you can just go ahead and buy, just do that, And I always recommend that people who are going to invest in crypto, depending on your age and your financial objectives, if you want to make money in crypto, you have to stay in the game. And staying in the game means being able to position size accurately. Personally, I don't put more than 5 to 10% in crypto. When it gets to be a larger part of my portfolio, I pare back. And I've lived by that since 2017, and it's worked out really well for me, because you're always selling as as the cycle starts to go up and crypto becomes bigger than other assets in your portfolio. And I also think the best way to do it is to dollar cost average. So just figure out how much you want to allocate over a given year, and put a little bit in every week. You can do this really easily on Coinbase. And then sometimes if crypto has like a rough patch where it's down 20 or 30% in a couple of weeks, then I'll double my dollar cost allocation. And when it starts to ramp up, then I'll just cut it back. So you don't want to micromanage it too much, but I think like the best strategy is basically having a position that you're comfortable with and really understanding this is a extremely volatile asset. That means there's going to be lots of upside and lots of downside as well.
I love the dollar cost averaging approach. That's the way a lot of people don't even think of it so simply as that, is just periodically putting a certain amount of money into it. That's how you beat market.
One caveat to that I know that I've noticed, like with Coinbase, there's a little bit of shenanigans going on in the dollar cost averaging, because they always fill my orders. And I'm not like, these aren't massive orders, but they're at like the high price of the last 6 hours. And you can actually see the little rally into the fills where they fill everybody else on. So I'm not running the SEC. I don't care about percent here and there, but maybe you should buy Coinbase on that, knowing like how they're able to manipulate the market on everyone.
It's ironic. You just pointed out the miners. If you look at Coinbase, there's a high degree of correlation between Coinbase and Bitcoin. But I think there's a little slippage there, as we would call it normally. And it's because Coinbase lags still. It'll actually lag what's going on in Bitcoin. Hey, James, how about you? What's the best way?
Coinbase is more than just Bitcoin. I think when you look at something like Coinbase, you've got to understand that they're actually deploying their own chain as well now, their own blockchain called Base. And there is a lot of development work going on that at the moment. So not only are we talking about Coinbase as being the biggest custodial service for the likes of BlackRock, and probably going to be so when the ETH ETFs come out as well. They're also, they've got wallet services. They've got payment services. I've still got a Coinbase card in my wallet here that I can still use if I want to. There's a lot of things that Coinbase are working on, not just buying and selling for people with crypto assets. So again, you can get bogged down in a bit of the detail, but you've got to understand that some of these crypto companies like Coinbase are far, far more than just what you might appear on the surface.
Excellent. Hey, James, let me circle around to you. How would you trade this? Is it just straight up one of the ETFs, or do you have something that's a little creative outside of that? What additional ways do you leverage these moves?
Well, first off, I agree with the earlier statement. No more than like 5 to 10% max of your portfolio in crypto, because it's very volatile and who knows. But I would invest in good, solid altcoins rather than ultimately Bitcoin and Ethereum, because for every percentage move of Bitcoin and Ethereum, these altcoins that are, don't forget, crypto is rebuilding the whole global financial ecosystem. It's like what I said in the very first statement, like crypto solves the problems that are created by current currencies, but using crypto ultimately requires a complete rebuilding of the financial system, and it's these altcoins, the good altcoins, that are doing it. That's where I would ultimately put money. But if you're just looking to get involved and you want a stock pick, it's very interesting. I'm not recommending MicroStrategy, but it's interesting to look at what they did. They basically were a nothing business that started buying Bitcoin, and their value went up huge because of that, because everyone's excited about Bitcoin. So what's interesting is smaller companies, and I've only seen one smaller company, but eventually other smaller companies are going to be doing this strategy as well, putting their cash into Bitcoin. So there's a small company, it's a microcap, Semler Scientific, SMLR. They make medical devices that check for different diseases. They're a good, solid company. They make great cash flows. They trade for about 13 times earnings. So by the way, regardless of crypto, it's a good microcap that just hasn't been noticed. But lo and behold, a couple weeks ago, they announced they're basically putting all their cash into Bitcoin. So the stock started moving up, and it's pulled back a little since then as people forget the news. But they've already made like millions of dollars on their Bitcoin purchases, and this is now part of their strategy. So it's Semler Scientific, SMLR. The market cap's 260 million, but with 24 million in cash flows and over 60 million worth of Bitcoin, no debt. So it's a pretty clean play. It's not going out of business anytime. It's massively profitable, low price earnings ratio. Every hedge fund under the sun is invested, like Renaissance, Citadel, AQR, Two Sigma. So all the top hedge funds are invested in them or getting invested in them. And they have this Bitcoin strategy that's propelling them upwards.
I love that. Is that going to be something that's going to be reported at some point as part of a company's financials every quarter? What kind of Bitcoin holdings do they have instead of just straight up cash? That's an interesting. I'd never thought of something like that.
Yeah, I don't know.
That's cool. All right. Any other thoughts on a way that we trade this? Any other questions?
Yeah, I mean, I would encourage people to also. I don't know what it's like investing from the US, because I don't know if people are aware, but crypto ETFs have existed in Europe for years. There's been Bitcoin and Ethereum. There's even a Solana ETF, a Ripple ETF you can buy on like the German stock exchange. So these aren't new things. It's just that they're new for America, which is obviously a huge market and huge amount of capital flow. So the innovation is there for these sorts of products. And there are multiple ways that you can invest. There's a company on the London Stock Exchange, and they are basically just holding altcoins. So their entire strategy is to invest in and hold altcoins on their balance sheet, and you can trade them on the London Stock Exchange. So there are ways out there outside of America as well, that I think people shouldn't just solely look to what the US markets have, because it is a big world. And that's, again, the advantage of crypto. is that it's not just, no offense, guys, but it's not just about America. It's about Europe, and it's about Australia, and it's about the UK, and it's about Asia. And so there are lots of opportunities on global markets for ways to play this as well.
Right. It's, you know what? You just made me think of something with this fund that is going into altcoins. It's almost like and I hate to put it in this way, but not a lottery ticket, but it takes some of that risk out by allowing somebody else to diversify that. So I would wonder if we're going to start to see more products like that that'll be out there where someone else is going to go out and
for sure.
Yeah, that'd be an interesting. Ian, you think that's something that you'll see?
Yeah, I mean, there are some on-chain protocols that allow you to do that. So you contribute Ethereum, and they can give you like a blended portfolio. Melon Financial is one of them. I think they rebranded as Enzyme a couple of years ago. One trend that I've been following that readers of my service are familiar with is the tokenization trend. And we touched on it earlier, but I think the main catalyst here is Larry Fink of BlackRock, who was really a driving force behind the Bitcoin ETF, is fully behind tokenizing real world assets. And, you know, this is not something that appeared yesterday. In fact, I think it was 5 or 6 years ago, Bob Greedfield of the NASDAQ was saying that by the middle of this decade, you know, all the NASDAQ stocks would be tokenized. We're still waiting for that, by the way. But I do think that if there's one person that can accomplish this and really drive it, it's Larry Fink, just because he has the ear with $12 trillion under management. He has the ear of both Wall Street and regulators. I think that one of the, and I'm going to recommend a sort of a hybrid crypto protocol here, kind of a protocol that has its leg in the real world financial and also, you know, one leg in the crypto markets. The company is called Ondo Finance. I recommended it to readers 6 months ago now. February, that's not 6 months ago, 4 months ago, sorry. The thing that's really interesting is it's run by the former head of digital assets at Goldman Sachs. They have already started tokenizing PIMCO and BlackRock funds. And why is this important? Because in the crypto markets, let's say you're on Coinbase and you have Ethereum, but you want to get to a stable coin. Well, you sell your Ethereum and you get back what's called USDC. And that's a stable coin that's backed by $1 in a bank. The problem with that is that you hold the USDC and you get nothing. Okay. But the issuer of USDC last quarter alone made $800 million, this company called Circle. And so what Ondo set out to do is create basically financial products. And the first tokenized asset they did were short-term treasuries and also money market funds, where instead of selling Ethereum for USDC, you would sell it for an asset that actually gives you 4 to 5% yield. And I believe that, you know, this obviously is one of those spaces that is going to increasingly get bigger and bigger as we start tokenizing the world's $800 trillion in assets. And Ondo is doing it in a way that is working with the largest issuers of these assets in the world and in a way that's regulated. There's a key here that Ondo token holders only get a vote in the Ondo DAO, which is their decentralized autonomous organization, which basically is a way to kind of vote on governance. What I'm looking for is when the SEC loosens regulations on what you can and can't do with tokens, and Ondo allows some of its fees for the assets they create to trickle down to token holders, which is something that another popular decentralized finance exchange called Uniswap did about 6 or 7 months ago. And that's why I think that this is headed higher with the whole tokenization movement. And one other thing on this is that BlackRock and Citadel applied for license to start a Texas stock exchange. Texas stock exchange. Yeah. Back in my day, selling equities in Dallas was like laughed at, but I guess it's like the hot thing. So I think we're going to have the first issue. They're going to start listing in 2025. 2026 is when you'll start to see companies go public there. I believe one of the drivers behind this is Elon Musk. He's going to bring his companies, which are now based in Texas, onto the Texas Stock Exchange. And I think with Larry Fink and BlackRock being behind it, this is going to be your tokenized exchange where you have lower regulations of crypto assets in a state like Texas, as opposed to New York, which has very, very strict crypto regulations.
That's an incredibly fascinating take on that. I would have never thought about that with the Texas Exchange, which I think it was just 3 weeks ago they announced that they were doing the file.
A couple weeks ago, yeah. Equities in Dallas. That's from Liar's Poker. You know. Not to knock on Texas, a great state. I was just there a couple of weeks ago. I love it there, but you never would think of it as like the center of finance. But
No,
it
not
was
a bit.
big.
Not a bit. Rodeos and country music is what I would think, right? All right,
Lots
guys.
of technology in Austin.
What's that?
Lots of technology in Austin.
Oh, tons of technology. It's a technology hub. We could go on another episode on that, as well as what they're building down in Miami financially, right? I am going to take this opportunity to kind of shut it down, though. Thank you very much for your time. I'm going to take the liberty to say I'm going to check in with you guys over the next 3 months, maybe 6 months or so, individually, and maybe even get this group together as we get closer to the other side of the election. I think there's going to be a lot to talk about as we continue to look forward in the crypto markets. Any last words from anybody? Once around the horn, starting on my top right with Ian.
Last words. Oh boy. Real quick, we talked about Bitcoin as a new form of money. I view it as a new form of religion. You got a pseudonymous founder who's a deity, Satoshi Nakamoto. You've got real world prophets like Michael Saylor. You've got false prophets. You've got lots of lore, lots of great stories. Bitcoin Pizza, and also the guy lost $250 million by losing his cold storage. And if you were to rewind time back to the early days of Christianity, I believe you would see Christian converts move into the fold, similar to how people join Bitcoin. This is the only asset I've ever seen where you go to a conference and people literally have the ticker symbol tattooed on their body. I go to stock conferences and people don't have Tesla tattooed. I mean, some people do have Tesla tattooed on their foreheads, but this is one of those things that it's a new digital religion. And imagine, being able to have a financial stake in that digital religion. That's what people need to understand as this idea, this meme starts to spread. And lastly, you believe in Jesus, you would anticipate having salvation after life. You believe in Bitcoin, you get rich today. So that's a very, very powerful meme. And I do think that's going to continue for years, decades, centuries to come.
I love that. How about you, Sam? Last words?
Yeah, I mean, Ian's not far off the mark, to be fair, but all money is religion.
He's
when you
already
break
a
it down.
convert.
Sorry. Preach, right? Look, I think the one thing I want people watching today to leave with is it might appear scary and it can be confusing, like I said at the top, but there are easy ways to get your foot in the door. If you're terrified, start small. Again, Ian said dollar cost average. It's a smart way to do things. If you take a logical, rational, reasoned approach to all of this and do some research and read, and if it's not me and the stuff I've written and continue to write in the UK and my books, be it Ian, be it James, listen to people that know what they're talking about and can help guide you through those steps to get involved, understand, and realize how significant this is. Yes, in the short term, but also for generations to come.
Awesome. And James, final words from you?
Yeah, more specifically, I think this election is going to be crazy. And there's going to be, no matter who wins, there's going to be a lot of uncertainty in the weeks and months after the election. And I do think crypto will benefit from that. I think this is just going to be a crazy time, the craziest time we've seen.
Well, I am looking forward to. I think it's going to be interesting to watch, especially if you get a little uncertainty, let's say within the couple weeks afterwards. In other words, contested elections. What happens not only to the market, but especially what happens to cryptocurrency? It seems to me as though there's going to be a foundation of value that'll be found there. That's certainly what I'm interested in watching over the next couple of months. Hey guys, I really, really appreciate it. And we'll stay in touch here as we approach the election. I want to get some updates from you guys. We'll keep writing for our subscribers here as well so they can follow along with your thoughts. I appreciate your time with that. I'm going to shut it down. Chris Johnson from Money Morning, as always, wishing everybody the best trading success. Have a great day.
Thanks very much.